Okay. Just gonna make sure the audio is good here. Gotta go to YouTube. Check one. Okay, I think we're good. Audio is coming through. All right, so we're gonna get started here. Live video for the ICT concepts NQ market review. Today is January 21st. It is Wednesday. We did have a bank holiday this week on Monday. Yeah, I guess we'll just get right into it. So today let's go to the hourly and see what we're dealing with here. So these green boxes, they're new week opening gaps. And I am going to pull open my chat here just in case anybody is in the chat. I doubt it because nobody watches these, but you never know. I don't want to leave somebody on red. And they're like, what the heck? Not that that's even going to happen because nobody watches this, but that's okay. We're doing this for us. Okay, so these green boxes here, these are new week opening gaps. All right, so I was anticipating us to flip bullish here and then trade up to this new week opening gap. Now, I didn't realize that we were going to get this high into it today. There was some announcements from Trump today, and that's what caused this massive candle at 2 p.m. But going in to the day, here's kind of like what I am seeing. So we did have this 9 a.m. candle close bullish. It did inverse these two gaps here. And let me mark this out as hourly, and then the one below it. Now, that's kind of like a crazy big jump. Like you're not going to like just long this on the hourly chart, right? So like you'd have to go down to the sub 1 minute and find, but this is at least indicating that we're bullish. And there was a little bit better of a tell here on the 30-minute pre-market. So we had this here. Let me put this on as our 30-minute. I am actually going to get rid of this hourly because I don't really like it that much. So we have this manipulation leg lower. So what I'm seeing this as is we have traded down on the left side of the curve of a market maker buy model, right? So left side of the curve, we gap down. We have our accumulation, distribution, and then we have our smart money reversal down here. And this is confirmed as our smart money reversal. I believe there was SMT with YM or something here. I'm not going to pull that up just for the sake of time at the moment. But this 30-minute gap here, once we close above here, 9, and then we have to 9:30. I think the 15-minute might have closed above here too. But this is definitely indication that we're closing aggressively above here. We're at least going to be seeking these highs, which we did hit. And then if we are on the right side of the curve, and this is indeed a market maker buy model with a smart money reversal point, we should be seeing the right side of the curve unfold. And because the left side of the curve had a lot of retracements and accumulations, we can anticipate this right side of the curve to be relatively aggressive, which it was. So we have a internal left side of the curve, right side of the curve here. This is a market maker sell model inside of the right side of the curve for the overall higher time frame market maker buy model, if that makes sense. And if it doesn't, just post a comment, let me know. I can do a video breakdown on any of the market maker XM structures as needed. And I do find them to be very interesting. This is actually how I see the market. I see this as a market maker sell model here, followed by previously market maker buy model. So all of these instances are internal market maker sell and buy models, right down to like the 1 second chart. It's all fractal. So it's pretty cool stuff. But again, with today's price delivery, seeing this bullish coming into the morning, anticipating that I would like to see these relative equal highs be taken here, which happened relatively fast after the equity open. Now let's go down into the sub hourly time frame. So let's go to the 15-minute. This pink box here is the current day's new week opening gap for Asia. So if you see that and wonder what that is, new day opening gap is what that is. So again, the overnight session in Asia, we have accumulation, London, and then into pre-market New York. We have our manipulation down to take out these relative equal lows below us. And then we displace, changing the state of delivery here, and then we retrace into this 15-minute gap here, which was a super solid play. So the best play of the day, in my opinion, happened right here at this reversal point in this 15-minute gap. So what I'm going to do here, I'm going to mark this gap out. Let's do our 15-minute. Now again, just want to re-emphasize accumulation, manipulation, distribution. So that's kind of what we're seeing here, right? So coming into the morning, there's a couple confluences telling us that this is a bullish setup. If we're going to go higher, we want to see it manipulate lower first to then go higher. Another thing in this area, we do have a quadrant that we were tapping off of on a weekly time frame. So when I say that, if we go to the weekly, we do have this bullish candle here. I'll get my fib tool. I'm going to move this over just so you can see in case you're wondering what I'm using. And then I have my preset tool here. This lower quadrant here is what we ended up tapping off of. So I'll take everything off but that lower quadrant. So we tap that perfectly. I'll go back to our 15-minute time frame to show you. We tap that right there. And also, this is also the area of a 4-hour point of interest for longs. So if we accumulate, we manipulate lower, we want to have a point of interest to see us long out of if you were trading pre-market. I was not trading pre-market, but this is just kind of for my own study. And if it helps you to, that is awesome. So one thing that's cool about this 4-hour POI down here is that the consequent encroachment, the middle portion, 50% of this gap is right in line with the weekly Wix 75% quadrant level. So extra confluences added on top of each other, super awesome. We have our reversal point down there, and then we trade higher. So continuing down, we are on our 15-minute. Let's go down to the 5 and see what we see. Okay. We have our trendline liquidity that has been built up down here. So if we do come lower, I would not be surprised if this is another target to dip back into this 4-hour gap down here. Let me see here. Just checking the chat just to make sure. Okay, cool. As expected. All right. So in this area where the bodies are holding this 15-minute imbalance, we're going to go right down to the 1 minute. There is a bread and butter inversion play that happened right here. Going to the 1 minute. Okay, as we pan over. Now the lines down here, these are our macro times, if anyone is curious on that. This 9:30 open here, this is equity open. We trade down into this gap. The bodies are holding in the upper quadrant above the consequent encroachment. There's also a couple of order blocks here that we have tapped into. So there's this order block formed here. We come down, we tap into that, and then we trade away. Now, this is the bread and butter inversion play right here. So we have our accumulation and then we manipulate lower. So let me draw this out for you. Imagine this is our accumulation phase, right? We then manipulate lower. We then break that, changing the state of delivery, trade back into that, and then we hit our draw on liquidity, right? All well, all good. Inversion play, getting it a little bit sooner before the full breaker formation forms. So when you have this low, high, lower low, higher high trading back in, this ends up becoming a breaker here. So this would be a breaker entry. So solid, solid, very good. And then this actually ends up becoming a propulsion block. So we have a order block created right here. We have another order block created right here, which is created by tapping into this order block. So this is the first order block. This order block is created by rejecting off of that order block. And then this order block gets traded into, and then you see a very fast run of propulsion. So propulsion block right here, at least as far as I understand it. If I'm wrong, please correct me. But the entry here, the best entry would have been this inversion bread and butter play right here. You close above this down close candle. So our accumulation, manipulation lower in a higher time frame point of interest, the 15-minute gap. There is also SMT at these lows with ES and YM, Dow Jones. So extra confluence on top. This is a perfect bread and butter play. And then you could go either break even above this high because it is your breaker, or this high if you were confident in your drawn liquidity. For the sake of this example and how high price runs, let's put our break even here. And then we would be targeting either the bottom of this new week opening gap or these highs here, which it inevitably does get to. If you want to be a little bit more conservative, you could do 50% of the range. Let me see actually where that ends up. Okay, so this actually happens at 50% of the range. So that is another thing to anticipate, or to not anticipate, what's the word? To note, I guess I should say, is that we did trade into a premium, and that was enough for selling to take place into a POI to then distribute out. So smart money ended up selling at a premium here, offloading positions at this accumulation, manipulating, and then so they are entering long positions here. They're manipulating people into selling, and then they are distributing higher to then capitalize on those positions. And then this accumulation up here is them offloading positions. People are buying up here, they're selling. Smart money sells, dips it down into a discount of the overall range again, and then buys up again. So this was a very solid move for the morning. The other move, the other best move of the day that I saw here was this accumulation here. Right at a new week opening gap, I'm going to go back out to our hourly time frame just to show you. Sorry for the whipping the chart around. So this new week opening gap where we gap down like 250 points from Sunday to, this is from Friday to Sunday's open at 1800. We trade right back up into that area. We also have a higher high on NQ, and ES actually made a lower high and YM made a lower high. So there's SMT at these highs as well. So let's go straight back down to the 1 minute here. And then there is a little bit of, I guess, a lot of bit of chop here, but we have the offloading of longs and time distortion, trapping orders, building up orders on both sides of the market. We then have a solid inversion play right here after a sweep of liquidity. Okay. So, all right, here we have our high put in, we accumulate, we then do a sweep in a higher time frame POI, i.e. the hourly, 4-hour, daily new week opening gap here. Sensitive area, it's like a limiter on price. So as we come up to it, it basically limits the flow of price according to ICT. And then we inverse here, so we could enter here. You might sit through a little bit of drawdown here, not much. Almost get ticked out right here, so a little bit scary. If you are on the sub 1 minute, 30-second chart, 15-second chart, there might be an entry here with a sweep of this internal liquidity here and here. That could be valid as well. I'll leave that for you guys if anyone's watching to go back in your charts. Just remember this is January 21st, if you are doing that. So basically what I was looking for this trade was a dip back down into 50% of this range for equilibrium, which happened pretty fast. And then you could go to, I'm going to take this off just to make things clear. But so looking at 50% of that range, we have a high here and, a low here, a low here. There's a couple of these lows on this leg. You could go to break even at one of the nearest ones. So we go to break even here. Price trades, move your stop to break even, and then cascading down just gets liquidated. All of these long positions are then being liquidated. People are selling while people are buying and selling. I mean, that's price, right? But we come down, you could hold a runner on even, and this would have came all the way back down to this order block that started this whole move, which would have been a very, very solid play. Not saying that is something that I did or would do. I did not hold this that long, but something I'm seeing in hindsight for my own study here. And these propulsion blocks, they did end up hitting a slight bounce. So I did try to get in long here. I got stopped out at break even. I did try to get in long down here. I got stopped out at break even. And then I ended up taking one more play. So I hit a couple of break-even trades today, actually. But yeah, there was SMT at these highs too. So don't forget that. There was SMT at this high. So that was an indication as we came down and did this inversion, that would have been a solid play. Now we did have I believe it was a 15-minute gap. Let's go back to the 15-minute. I'm actually going to put a horizontal line on that price. And then I'm also going to put a vertical line just so I know where the axis point coordinate is when I go out. One thing I like to do, okay, so I'm looking at this particular high. I mean, you can always look at the time too, but it kind of makes it a little visually easier for me. Is there a volume imbalance there? There's not. So we don't necessarily get to that high. We do have this 15-minute inversion. So was it this I was seeing? Yes, it was. Okay. Okay, so 15-minute, we'll go back down to the 1 minute here. Beautiful. Yep, this is exactly it. So this was a very solid play. Okay, so we have this internal liquidity being built up after selling off, right? We have our lower time frame entry here. And I believe the 2 or 3 minute was even better on this. Or was the 30-second I forget. There was one solid entry on this. Sorry for whipping the chart around here. Yes. 30-second. Okay. 30-second was looking the cleanest. All right. And then we drop this guy here, stop above the high of the imbalance, targeting swing low or internal liquidity. Break even could be below this swing low if you wanted to take risk off as soon as possible. And this was this very solid trade. All right, we'll go back up to the 1 minute. And then, yeah, so I believe I also tried to long somewhere else in here. I believe maybe after we made this little pitchfork sweep here off of this order block, I believe I longed this and I got out for break even. I had a lot of break even trades. It was kind of frustrating day for me, to be honest. And then this huge move up here was a news release that was unexpected. So something that you most likely would not have been able to anticipate. But if you're wearing longs, I really hope this ripped for you. And I hope this was a really fun trade to be in. And yeah, so then we come to market close. We tap the new week opening gap. We actually come relatively high in it. And if we go to ES, we ended up coming to the just below the consequent encroachment. Sorry, so it's not red on this one. I can change it to be red. 50% line color, red. Okay. So we failed to get to 50%. We then roll over. So a short-term play, if you wanted to get, you know, a little bit out of this, maybe even to here. So there's that. Let me go back to NQ. It just reminded me of the very first inversion bread and butter play that I forgot to mark out and show you. One of the main things that this had for characteristics of being a solid play was that we were in a discount of the previous oscillation. So we came after the accumulation. So technically this is accumulation, manipulation, and then the accumulation before the reversal here. So this low to this high, we came below 50%, permitting things to be purchased or discount, be bought up at a POI with SMT. We inverse, close above, and then off it goes. So just one other thing that is very important for me to be seeing. So obviously I'm making these videos for my own study. So as I look back at these, premium discount seems to be where all of the best inversion plays tend to happen, especially if you have a clear manipulation. So accumulation, manipulation, and distribution where you get those pullbacks. When you come to a discount here, and then you have a solid inversion play with good momentum, those I have found, or I am finding rather, to be the best inversion plays, highest probability. So going forward, I need to remind myself that I should always be looking at the premium and discount. And if I have a draw on liquidity, are we trading in the direction of the draw? So the draw for the morning was the bottom of the new week opening gap. And then we came down to OTE of this range into a discount. So below 50%. I put the OTE on here. We come down to the 70.5, 62 level. We accumulate between those. We then manipulate up for longs, manipulate down for shorts, taking out sell side liquidity. And then we do have an inversion play here for longs that we did come down, tap back into. If this was our change in the state down here, we come down into an order block, hit that, and then we rally with this news release, which is unpredictable. But all in all, beautiful price delivery today. Very fun day to trade for sure. I definitely could have seen things a little bit better. I'll say that. We are break even on the day. So unfortunately, I have a break even streak that continues, but we are working at alleviating that. This is only month 3 of trading with actual prop firm funds. So before that, I was just trading on my my demo and paper trading simulation account. So yeah, so we're not doing too bad. We've learned a lot in such a short amount of time. But yeah, I just wanted to go over the price delivery for today. If anyone is watching this, I hope you guys find this helpful. And thanks for watching. I'll see you guys in the next one. Peace out.